Get off the sidelines and take control of your financial future at www.tackletrading.com. Get in the game.
Matt Jones is here for Tackle Trading, bringing a market recap for Columbus Day, October 12, 2015. And what a boring day in the market it was. Not a whole lot of activity. Today in the marketplace ended up slightly up on an uptick with very low volume. As you can see here, extremely low volume. Very early on in the day as well, had just tremendous amount of low volume today. Just not a lot of activity in any capacity today in the marketplace. In the futures market, especially coming in with less than a million total contracts being traded in the futures. That is the lowest day we've had for quite some time, as you can see. And as a response, the market was very, very weak today, just up slightly. It's up slightly a little bit with a focus towards earnings, I would say. When you're looking at across the board here, going to tackle trade, looking at the heat map right here, base materials got pounded today. Healthcare, surprisingly, biotech had a fairly decent day today with Amgen up 2.3%. You also had Regeneron up 4.55%. You had Vertex up 2.96%, with only the two laggards in Biogen and Gilead Sciences were the ones. But outside of that, they had a good day, and as many of you guys, biotech needed a couple good days. Utilities another good day. Technology had a fairly decent day. Services decent day. Consumer goods really kind of break even today. Not a whole lot. Same thing with the financial sector. Best performing sector this today as a collective was utilities, but that's nothing we haven't been seeing lately. It's been the best performing sector. If you look at this over the last 3 months. Utilities has been the best performing sector over the last 3 months. Healthcare, one of the weakest. Basic materials, one of the weakest. Financial, one of the weakest. Technology, break even. Services, a little bit of break even. But utilities has done fairly good. Apparently, Altria Group, cigarettes, doing pretty decent over the last 3 months. I guess when bear markets start to hit, people start to smoke more. I did know they start to drink more. Liquor sales do go up in bear markets. Apparently, cigarette sales do as well. But that's over the last 3 months. Now, this week in the marketplace, when we're looking at the entire marketplace from an economic reporting perspective, I'm going to bring up Forex Factory. We're just going to look at the U.S. dollar here. We're looking at major pairs as major, announcements and not so major announcements. A lot of Fed members speaking today, but really the activity starts on Wednesday. Retail sales PPI report coming in on Wednesday. CPI, both of these, this is an inflationary week. CPI report coming in on Thursday, and then Friday with the consumer sentiment report, also spaced into their manufacturing index report. So not a whole lot of reports until Wednesday when you get retail sales, your inflationary reports, manufacturing, as well as consumer sentiment. Now, looking at the marketplace, I think more than anything this week, we're going to start to really see earnings. This is what we're really going to see coming. Excuse me, I'm coming over a cold here. This is what we're really going to kind of see coming over the next little while is we're in the middle of earnings season again. You've had JP Morgan report earnings. You've had Johnson & Johnson report earnings. You've had Monsanto. You've had Intel report earnings. You've had Pepsi and Nike and Alcoa all report earnings. So we're in the middle of earnings season, and these pink ones here, these are ones that are the hot pink. These are the ones that are going to be reporting fairly soon. Wells Fargo, we're getting a lot of our financial sector, our technology, industrial goods coming up in the next 2 weeks, basic materials coming into the next 2 weeks. So if you are investing in companies out there, you got to make sure you know when that company reports earnings and make a determination if you want to buy insurance in terms of the protected put option. And if you don't know what that is, I'm sure we have videos over there at Tackle Trading to help you understand, as well as it's taught in one of our classes at Legacy called Options Number 1. So if you're interested in that, you can definitely check that out in Options 1. And for those members of Legacy, you can go check out the on-demand to kind of remind you of that put option and the protected put option and everything that comes with that. But you got to check when that earnings date is, because if you expect some volatility, and if you expect any degree of downward movement, then this is something we absolutely have to track. In terms of the ones that have already reported earnings, for example, you have JP Morgan reporting tomorrow. You've had Johnson and Johnson reporting tomorrow. These are the ones that are reporting very, very, very soon, October 13th with Intel. Nike here report on September 24th. Just to remind you of why we need to track earnings, and Nike had a good announcement here. As you can see back here on earnings, we had an earnings gap, and as it's been doing, it's been tracking up. So we got to know when earnings happen so that we can make a decision whether or not we want to protect the company or not. For example, if I was looking at this on Nike, and I'm looking at this earnings report here, and not a whole lot of movement. This earnings report here, that's a 3% movement. This earnings here, that's like a 1% movement. And I'm saying to myself, historically, Nike doesn't really move a tremendous amount on the actual earnings. If I'm willing to take a 2, 3, 4% hit to the downside with a 50-50 probability, then I'm just going to hold through the earnings. But if not, I'm going to go buy a put option on it to protect against that downside risk. But you got to go through the analysis to give yourself an opportunity. Now, like I said, this is going to be starting on Wednesday, Thursday, Friday. We do have some important economic reports this week, but this is earnings. This is earnings. It really picks up this week, moving into next week. Let's take a look at the marketplace as a whole. You're looking at the market potentially breaking out of resistance here, and as it's starting to slow its momentum. I've said for a very long time that 1900 to 2000 was it. It did get back up above that with some vengeance last week, and now we're starting to slow its momentum. Now my new support resistance levels, ladies and gentlemen, here's a really easy one: 2040, 2030 to 2040 in the market, maybe 2030 to 2050, somewhere in that range, that 20-point range. That's only 1% range when you're talking about support resistance. Going back down to 2000 and 1900s, new support level. So now you do have a new, you can make a strong argument here that this is a slightly bullish uptrend that is now approaching into some major resistance. And, if you look at it from a weekly standpoint, ladies and gentlemen, you're going to start to see the formation of a kiss of death if that kiss of death gets into that 2040, slows its momentum, starts punching back to the downside. That is something that we absolutely need to be concerned about. But for right now, that's longer term. For right now, looking at this fading back up into the 2030 to 2040 range, it could turn around any time from here, guys. I mean, we are talking about a market that in the last 2 weeks has run from 1867 up to 2011. We're talking about a major move in the last 2 weeks. So obviously anything can happen, but we still have major resistance levels above that. So I am looking slightly bullish on the ES because it did break out of this level of resistance. However, I'm still very cautious long term. Very, very cautious long term. I do not buy that the Fed is going to start quantitative easing without doing something before that. And that's what a lot of this movement is based on, is that the irrational belief that of the market that we're going to go into another version of quantitative easing 4. And I think that was just absolutely the most asinine thing I've ever heard in my life. Now, coming from the Fed, nothing would be too shocking, but they have been telling us they're going to raise rates for a very long time. Maybe they don't raise rates, but to do another quantitative easing, it's just, to me, that is a signal that this economy will never get better. That's exactly what it would signify to me, is that the Fed has lost all faith and confidence of the free marketplace in America today, and I just don't think they're prepared to say that. They wouldn't say it specifically, but if they go into quantitative easing after 7 straight years of easy monetary policy and 9 years since we had the last interest rate increase, they are basically telling us that the national economy, we're going into Japan, is what they're going to tell us, that we're going to be faced with what Japan has been faced with over the last 30 years in economic stagnation and deflation. And that's just something, I don't know if we're prepared to say that. I don't know if the Fed is prepared to say that. So it's going to be interesting in that capacity, but at this point, we are looking a little bit slightly bullish. However, I'm still very cautious, and this thing could turn around any time. It could turn around, and I am getting ready to buy put options once I see any strong downside movement. The biggest concern I have today, and really the last 2 days on this fade up after it did break, is the volume. after it broke out of the 1990 to 2000, really low volume on that movement here, and it's obviously starting to slow its momentum right there. Looking at crude oil kind of coming down a little bit, broke out, kind of had a couple good days, but then it got to this area right at $50, and as you can see, it's coming right back down. I was in a training on Friday last week, and I said, listen, if the market can't get above 50 and maintain, you got to lock in profit. And it's this awesome kid by the name of Mike. I think he's going to be one hell of a trader, by the way. And it came into 50 and came right back down. The Syrian strikes from Russia really has aided it the last 2 weeks, but couldn't get above 50. 50 is a very important zone for it. That's why a lot of energy stocks got beat up today, and now it's starting to come back down. I'm still looking at neutrality right now on crude oil. On the dollar's been a little bearish lately. If you've been watching the Forex report, I've been a little bearish on the United States dollar, but now it's coming back down into support levels between 94.5 and 95, starting to slow its momentum a little bit. So I'm looking at this potentially coming back up into the 95.5 to 96 range. I'll have more on that later on tonight with the Forex report. Gold here, everybody loves gold. Gold's been doing absolutely fantastic. Broke out of a long-term trend and getting back up above those levels. So that's not the one I like that much. I like silver more than I like gold right here, and I do have a slightly bullish bias on silver. I have a neutral bias currently on gold. My long-term projections on the commodities are still downwards, however, and that is the market recap video and getting you guys ready for the week coming up in terms of earnings and economic reports. Matt Justice for Tackle Trade. Get in the game one trade at a time over there at tackletrading.com.
Get off the sidelines and take control of your financial future at www.tackletrading.com. Get in the game.